Hi everyone, my name is Dan Ozaki with the Alliance Group, and today I want to talk about tax-free retirement for doctors, dentists, and business owners. This presentation is called Making the Most of Your Retirement Dollars, Seeking a Tax-Free Retirement Educational Workshop. Let's talk about some facts about national debt. In 2009, the official U.S. debt was $11 trillion. In 2008, it was $9 trillion. That's a $1.9 trillion official increase in just 14 months. If you actually look at the national debt clock right now, we're at about $14 trillion of debt. That's official debt, but the real national debt is $61 trillion. So there is a difference between real national debt and official national debt. Your share of the real U.S. debt is $200,000 per person. If you look at your Social Security statement, on the front page, it states, in 2017, we'll begin paying more in benefits than we collect in taxes. Without changes by 2041, Social Security Trust Fund will be exhausted. So basically, Social Security is telling you on the front page of your statement that they're going to run out of money. So with the national debt at $14 trillion, Social Security run out of money, how are they going to cover all of these costs and expenses? Well, there's only two ways to combat growing debt. Either spend less or tax more. Are we spending less as a government? And the answer is absolutely not. We are actually spending more than we ever have in the history of our country. With the bank bailouts of $700 million, who's going to have to pay for all of this? We are, and our children and our grandchildren through income taxes. So the only other solution seems to be higher taxes. This is a graph of the income tax brackets from 1910 to 2000. Right now, we're at an all-time low as far as income tax brackets are concerned. And the reason is because baby boomers, 76 million of them, are still in the workforce. So in the next 10, 20, 30 years, these 76 million baby boomers are going to start to retire, and they're going to start to pay less income tax, which is going to force the U.S. government to increase income tax rates for the people that are leaving the workforce. So that means increase in income taxes, and you can see this year the income tax rate went up and it's going to continue to go up. Smart money retirement order. Let's talk about free money, tax-deferred money, and taxable money. Free money is inherited money, matching 401k money. Tax-free money is Roth IRAs or life insurance-based cash value policies. Tax-deferred money is annuities, tax-qualified plans such as 401ks, IRAs, SEP IRAs, and then there's taxable money, which is wages, capital gains, and 1099 interest. Let's take a look at the difference between a tax-deferred plan and a tax-free plan. In a traditional qualified IRA or 401k plan, what happens is you deposit money into the account and it grows tax-deferred, but when you actually retire and withdraw the money, you have to pay income tax on the money coming out. Roth IRAs or life insurance-based retirement plans with cash value, what they do is they have after-tax deposits. The money grows tax-deferred, and then when you retire, you can get tax-free distribution of that money. So the question really is do you want to pay taxes on the seed, or do you want to pay taxes on the harvest? So by deferring your taxes in a 401k or IRA, basically you're going to pay on a larger lump sum of money than if you were to use after-tax deposits. When you put your money into an IRA or 401k or SEP IRA, are you really saving tax? No, you're simply delaying tax, which actually compounds the tax problem. If you were a farmer, would you rather pay tax on the seed or the harvest? By investing in a traditional qualified 401k or IRA or SEP IRA, you're actually paying on the harvest, whereas with a Roth IRA or an insurance-based cash value policy, you're paying on the seed. What's best for you? Well, for doctors, dentists, and business owners, Roth IRAs, a lot of you don't qualify for that because you make too much income. So the only other alternative is a universal life policy that has cash value. We deal with index universal life policies, and the index universal life policy guarantees that our clients cannot lose money that's credited to their cash account. They can take gains of the stock market up to somewhere between 12 and 15% because the insurance company caps it. And they have a minimum guarantee of either 1, 2, or 3%, where if the stock market loses money, they were still credited their account a minimum amount. So which is best for you? Well, obviously, if you could qualify for a Roth IRA, it would be a good idea. But if you can't, the best way to do it is through a insurance-based retirement plan. $2.3 trillion lost in retirement savings plans in 2008. People who purchased index annuities or index life insurance plans haven't lost a penny due to marketing conditions. So this is basically our presentation on tax-free retirement. We also set up through your business, if you're a business owner, through a C corporation, you can actually get banks to lend you money at simple interest, a couple $100,000 all the way to a couple $1 million. You pay on that simple interest loan and they invest it in an index annuity or an index life insurance policy. You earn triple compound interest on that. After 5 or 10 years, what happens is you can pay back the principal loan back with what you borrowed, and you get to keep all of the triple compound interest. So there's a lot of options for doctors, dentists, and business owners. The best thing to do is to get together with a licensed agent that knows exactly how this tax-free retirement plan works for small business owners, doctors, and dentists. Set up an appointment and get the information that you're going to need, because the decisions that you make today will determine what your future is like as far as your retirement is concerned. Again, my name is Dan Ozaki with Alliance Group. I appreciate you guys taking the time to watch this video and get in contact with a licensed agent. Thank you.